Hey, Steve Saretsky here. As always, it's a Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. Wanted to touch this week on really policy making, what their viewpoints of the market are. I think we're obviously at a very important part of the market where clearly in Vancouver, the market is soft. Confidence has been hit over the head. I think there's a lot of negative sentiment. Obviously, the media picking up a lot on this. And so we have this growing friction and divide, which I think is growing between basically the haves and the have-nots. People that are obviously fed up with rising home prices, and then you have people that are basically banking on their equity in their home to basically fulfill their lifestyle and their retirement. And so this is becoming a very political conversation, which I'm going to try to stay away from. I just merely want to talk what this means for the market. And first of all, just to clarify my viewpoint is that there has never been free market. So anybody that suggests, this government meddling into the markets, free markets, there's never been a free market, okay? Let's call a spade, as Howard Marks says. There is no such thing as a free market. All you have to do is look at central banks manipulating, the value of money. They manipulate interest rates. They engage in quantitative easing, which is essentially buying bonds, buying public equity stocks. That is not a free market. So there's definitely been a lot of government policies that have certainly been supportive and stimulative of the housing market. That's realistically why Canadian household indebtedness is at record highs, and it's why house prices are at basically, up until recently, record highs. So, it's been a 20-year bull market, so you can't say that policies have not been supportive of the housing market. So now the fact that they're pulling things back, I don't think people should necessarily be upset that this is not a quote-unquote free market. But I certainly agree that you could certainly argue that governments, I would say, have gone too far, at least in Vancouver, with the amount of taxes and policy changes, really at a bad time. I mean, the market is already coming down. These things don't correct overnight. These things take years to play out, generally speaking. But just interesting to see some of the headlines come out and how the policymakers are reacting. So there was a headline this past week talking about how equity was being lost, and the changes from the BC government are really impacting the housing market and the knock-on effects. And so I'll give BC Finance Minister Carole James's, and I quote her: "I think the majority of British Columbians would tell you that we have a ways to go yet for housing to be affordable." Adding, she's encouraged with the direction of the real estate market. So you have your level of government, which is saying we're not going to step back from these policies. We're actually encouraged by the direction of the market. Again, let me remind you that through the first 4 months, cumulatively, this is the fewest total number of sales for this 4-month period in Greater Vancouver since 1986. So if she's encouraged by this direction, I think that should probably tell you a lot about the government and the policy-making decisions, and what's going to be a potential catalyst to reverse this thing. That's the reality of where we are today. And then you want to talk on the mortgage stress test. I'm just going to pull this up here. You had Evan Sedal. So there's been a lot of lobbying. I am a huge fan of Evan Sedal. I think the stress test, unfortunately, should have been in play years ago, not when household debt is at record highs and house prices are at record highs. Because in order for house prices to continue to grow, credit expansion needs to continue to grow. You need more and more borrowers to enter the market to basically keep the market momentum moving. You need new credit to continue to expand. And as we've talked about, residential household credit's growing at 20-year lows across Canada. So clearly, that's going to have an impact further down the road. And then you have people moving into private mortgages, which arguably, in my opinion, makes things even more unstable. But alas, this is where we are today. And as I've told you before, all you have to do is read the book House of Debt that is basically chronicling 2008. It talks basically the understandings of private debt and how those create financial crises, banking crises, etc. And Evan Siddall's playbook of CMHC is directly basically out of this playbook. So everything that he's brought in is basically from there. So you really shouldn't be surprised. If you've been watching these videos, you shouldn't be surprised by any of the moves that he's brought forward. But I'll just read you an excerpt again from Evan Siddall in his recent article, which I'll actually link to in the description below. He says, Home Builders Association, the Mortgage Professionals Association of Canada, and the Ontario Real Estate Association have all called on the government to ease the stress test and restore 30-year mortgage amortizations. Either of these would have added to housing demand across the board, not just to targeted a small segment, and price inflation as much as 1% to 2% in our large cities. Both ideas would also stimulate increased borrowing. Paul Taylor of Mortgage Professionals Canada was bold enough to criticize the first-time home buyers incentive to this committee last week in suggesting that we should actually encourage people to borrow 4.8 times your income. The same rhetoric led to successive U.S. administrations to promote home ownership to a fault. Apparently, the Mortgage Professionals Canada is content to see home builders, real estate agents, and mortgage brokers receive short-term benefits while Canadians bear the long-term costs. My job is to advise you against this reckless myopia and protect our economy from potentially tragic consequences. Indeed, it was my primary aim in leaving a private sector career in finance for public service to help prevent a repeat of the harm that excessive mortgage lending created for hundreds of thousands of households just a decade ago. So this is the guy that basically runs your Canadian mortgage market, the largest insurer of Canadian mortgages. This guy is basically holding no punches and actually like going out and attacking the real estate and mortgage profession. Very unprecedented time. So you have, the BC government, and you have your largest mortgage insurer, your federal mortgage insurer, basically coming out and like taking jabs at the national and provincial housing markets. These are unprecedented ways that government react. Generally, government are supportive of house prices because they create this wealth effect. You create additional spending through rising home prices, obviously increases the tax revenue base. But now to see governments go the other way and basically come out and essentially say their goal, their objective is lower home prices is really something that is hard to fight against. And then just to add to that, you had the Bank of Canada's Stephen Poloz come out also this past week and say that he would very much be against any sort of idea of amending the mortgage stress test. So I'll actually clip to that right now.
Every individual pays that, not just theoretical. It's real. So we want to avoid that.
Are we overly complacent about inflation? I mean, obviously with tariffs in place, maybe we're not as complacent as we were previously, but it feels as though we stopped talking about it altogether.
Well, for a long time it underperformed, and in Canada we've been at 2 for pretty well 2 years now, which is great. But it does seem as though the concern that we used to have was that if you just got a little bit above potential, the nonlinearity would grab you and you wouldn't be able to stop the rise in inflation before it went above your top band. And the suggestion we have now is that expectations are sufficiently anchored that there's kind of a room to maneuver there. You've earned credibility coin, if you like. And I think, we kind of used that during the oil shock. We cut rates at a time when inflation was rising because of the exchange rate decline. And but Mexico didn't. Mexico had to raise rates. So there's a different, even though the shock was the same. So I think that's kind of an example where you can see, well, there's benefits to a long period of stable inflation and high credibility, but you got to really retain them. You can't just blow them, So, of course, all central bankers are wary that we could be heading up the curved part of the Phillips curve. It's probably not dead. But in the meantime, we've got some very good stuff happening on the supply side of the economy.
People do say the Phillips curve may be dead, actually. It may be the same people who believe in modern monetary theory, but we do see this weird disconnect. You mentioned it, those jobs numbers.
Yeah.
I talk to economists who say, we don't get it. We don't understand why the jobs numbers are doing what they're doing.
Yeah. Well, we need to continue to understand this, but I think my favorite theory is that the profound thing that's happening is technology. And that's generating all kinds of new activity that is actually a little bit hard to measure in the service sector of the economy. And at the same time, putting lots of jobs out in the more practical part of the economy under threat.
So, I mean, as you can see, we basically have all three levels. So in terms of, people, for me, like I am not someone that is here trying to predict the market and tell you this is what's going to happen, prices are going to go down this much. All I'm saying is, like, all I have to do is look and say, okay, well, I have three levels of government that are basically telling me house prices kind of got out of control. Oops. And by the way, our goal now is to sort of slowly let this thing come out, slowly let it leak out, and just get housing back down to a little bit more affordable levels. And by the way, we're not going to listen to any of your lobbying. We're going to come out publicly and state our stance. For me, I don't really want to bet against that. That's just the reality of it is. So I don't know. I think these are just crazy, wild, fascinating times. I mean, it's interesting to see the banks come out. CIBC's Benjamin Tal was obviously against the stress test, but all you have to do is look at, CIBC, who I think has been one of the most aggressive lenders in this entire housing boom. I mean, their uninsured mortgage portfolio was growing at 15, 16, 17% in like 2017 when everybody else was scaling back around 3, 4, 5%. These guys are just blowing things out of the water. Now you can see loan growth for the past 2 quarters has actually been negative for CIBC. That hasn't happened in a very long time. So you have a lot of, again, political friction right now between banks, home builders, realtors, mortgage professionals, politics. These are just incredibly interesting times to be a part of. For me, it's just interesting to wake up in the morning and get to work. I think just fascinating times. I mean, I'm certainly empathetic to, people say, oh, who cares about the developers and, these guys are all greedy. I mean, not all of them are like that. It's really just a stereotype. And, I'm just seeing it from a feet on the ground perspective. I mean, some of these spec builders, holy smokes. I mean, these guys are just getting just rinsed right now. And it's tough because you hear it, you talk to them on the phone, and I'm empathetic to it. So I certainly see, hey, you win some, you lose some. That's the way that these markets go. And, unfortunately, it didn't work out. And, but yeah, I can certainly be empathetic to that. So I think I want to caution people on that front. But, because I certainly see a lot in these comments, bashing everybody and, oh, you're so stupid, shouldn't have bought, shouldn't have built. I think everybody's obviously reliable for their own decisions. But that's not to say, again, I don't hold any predictions on the market, simply here to sort of document my thoughts. Obviously, very interesting times in the market. And despite the turmoil here in Vancouver, there hasn't been any sort of political inclination that things are going to be reversed anytime soon. Again, maybe that changes in 6 months. I don't know. We'll have to see how things progress. But anyways, don't want to ramble on too much. Going to keep things a little bit more condensed here this week. So hope that video helped. Otherwise, see you next week.